this is kind of, I think it's widely known. I don't think anybody talks about it. But I did a podcast on this and it got a lot more traction than I thought. So I figured, hey, why not make a class about it? Why not spread the word, so to speak? All right, so you're gonna need three things. Whenever you look at anything, look at any building, and I put 4 class types here. There is land, but land doesn't count. Everybody throws land at me. Land doesn't generate any money, so you can't really use it for that. There is hotels, there's gas stations. Those work more as a business though. So I'm talking about one of these 4. Does anyone want to pick one?
Retail.
Retail. Good one. So retail, if you notice, I have 15 to 35. These are your expense ratios. So it ranges, for example, because depends on the property class that you're buying. Is it Class A, Class B, Class C? So I did a little simple illustration here. Class A, 0 to 10 years, B, 15 to 30 years, and Class C, 30 to 50 years. Now, depending on the condition is depending on the expenses. So you only need 3 things to figure out the value of a property. Number 1, you gotta have the gross operating income. You gotta know how much money can it make. That's all we're concerned with. We're never concerned about net income because we know the seller is not going to disclose every single item to you. Or they're going to play with the numbers a little bit, or maybe leave something out. They self-manage, could be anything. And on this example, I took 100K, and we're going to use expense ratios. And in this example, we're going to use retail, and we're going to take 20%. And we're going to take 20% expenses. This is kind of a B, Class B property, and basically what your return is. So if you're making 80K, so you're making 80,000 a year, and your investor wants a 10% return, that means you have to buy this property for $800,000. Now retail, I don't know if you're gonna get a 10 cap on retail right now. It's probably not gonna happen. So you're gonna have to be a little more realistic, and let's say you can get an 8% return, which is not that crazy. So if I wanted to buy this cash flow stream at $80,000, it would cost me $1 million, because if I paid cash for this property, which nobody pays cash, we already know, we already told you that. If I was to pay cash for this property, at the end of the year, my net in my pocket would be $80,000. So that's if he wanted to sell it to me for that much. And if, what's a more favorable return? Somebody throw something out.
10%.
10% is kind of really favorable. But so 10% would be 800K, but we use 10% so everyone's not lost. That's why I started off with 10%. If you wanted a 10 cap, 10% is not as common as people think it is. It's a little rougher. But if you were to buy if you wanted to buy this at a 6%, you'd probably be around 1.3. And I haven't done the math on that, but you'd probably be around 1.3. So if you wanted to buy this property, you wanted to buy this income stream, remember it's a business, we're only buying businesses, we're not buying buildings. We're buying income streams. If we're buying the income stream at 7%, 6.5%, then we're gonna pay about 1.2, 1.3. So whenever you see a property, whenever you see an expense statement, whenever you see anything, you don't need the full report. You need to know your units of inventory. So if it's retail space, if it's an apartment building, whatever it is, what can you get at pretty much the end of the year? What's your gross? So at the end of the year, if you know you can gross $100,000, figure out what's the expense ratio. Remember, these are just quick evaluations. You're not sitting there trying to pull out long form math. Just if it's brand new, Class A, then you're gonna have very little expenses. You're gonna have a pretty decent deal. Most of the time, you're gonna be around 20, 25%. I did 20 for easy math, but just to kind of give you an idea. And then the third thing we need is figure out what return you want. So if your investor tells you, look, I need to have 6 or 7% return, and I've got whatever amount of money to spend, that's kind of how you work backwards.